If I'm an investor and I'm trying to decide that, okay, I believe in neoclouds, which one should I invest in from there? This is an area that is going to continue to be talked about and be a hot topic moving forward. I'm a believer in the space personally. Like I think that these companies will work.
Hey Alex, how you doing?
Doing great, James. How about you?
Doing wonderful. You ready to talk stocks and more?
Yeah, let's get right to it.
Awesome. Well, we just finished a little mini series. We're diving into a new one. What content or topic do you have for us this week?
Yeah, so today we're going to be talking about neoclouds. And this might
Ooh,
be a new thing for a lot of people, but
yeah.
these have been easily the hottest stocks over the past 2 weeks. We've seen CoreWeave pop 19% after earnings. We've seen Nebius go up over 30. So these are really hot stocks right now.
I have a small position in CoreWeave, but maybe we start there with the definition and explanation of what neocloud companies are and what that serves within technology and AI.
I think in general, people know what clouds are. So you've got Google having Google Cloud, you've got Microsoft with Azure, and then Amazon, of course, with AWS. Those are the three big players. But the way that their clouds work is that they are multi-purpose, right? I can run all kinds of different programs, I can store all kinds of things on them, and they're hosting all kinds of different software. They also do AI. And so we've had a lot of AI companies working with them, and obviously this has been a big boon to their business. But what if there were clouds that all they did was AI? And they used GPUs and cards that were specifically designed for AI? That is where the neo clouds come into play.
Right. So they're an offshore location, cloud, hence somewhere else, where their warehouses or data centers are just full of these computers that are specifically designed with GPUs to be like raw engine compute power processing capability designed for AI. Is that right?
Yes, and just think about this. If I'm a small startup and I have an
Right.
AI idea that I want to go use, I can go to one of the big players, and sometimes it costs more money to run this stuff on AWS than it does on the neo clouds just because of how efficient they are. So I have the idea of I go work with the neo cloud or I build out these clusters myself. And we know based off of Nvidia earnings and AMD earnings, these cards are super expensive. And if I'm starting up, it's way easier for me to go borrow my compute rather than building out my own warehouse. I need tons of money to go about doing that, and that's where the neoclouds have really built a niche in of capturing all of this huge momentum we're seeing with AI and making it so that there's an efficient way that new and smaller companies can go through and get their compute from there.
Yeah, and I think what I read is some of the other functionality that they help provide that requires so much specific type of compute is in AI model training. And so as it's consuming all of the data that it's using to build it, to actually train the model is just a big compute processing power against the GPU. So they really had to kind of expand those processes into big data centers just to do that modeling as well. Does that sound accurate?
Yeah, I think that's a great example to bring up. So again, this is why the neo clouds are having success. There's huge demand for compute. We've heard from the major players in their earnings that they are very constrained when it comes to this stuff. And as we go through the companies today, a lot of these have massive backlogs in the billions of dollars, showing that these companies are planning well into the future. And that's why the neo cloud stocks have been pretty hot right now.
Yeah, and the whole concept of neoclouds is fairly new, kind of upon the arrival of AI and the need has created this new kind of company. What are some of the ones you have in mind or kind of at top of the market here?
Yeah, so we're going to be talking through four companies today. So we're going to start off with the two major players, CoreWeave and Nebius, and then we're going to transition into one of the newer players called Iren, and then finally we're going to talk about a company that's not a neocloud themselves, but they rent and lease space to the neoclouds, and this is Applied Digital. So everybody will want to stick around so that we get a good feel of like what are the major players and how I think about each of those from there.
And then now we're going to take a look at a few of the companies. By the way, I encourage anyone watching to like and subscribe so you could stay aware of some of these types of videos as we release them. But let's dive in and tackle that first NeoCloud company you have for us.
Yeah, so we're going to start off with CoreWeave. And CoreWeave is the biggest player right now of the neoclouds. We just had earnings from them as well, and they put up a really amazing quarter. So Q2 revenue came in at 2.58 billion. That was growth of 112% versus a year ago. They also had margins right around 59%, and their backlog within the quarter was around 104 billion. So that means that they are seeing in the future $104 billion of contracted value. So I mean that's an enormous number from there.
Yeah, that's interesting. 2.6 billion in the quarter and that backlog of over 100 billion. That's multi-years of effort, or do they need to try and do more per quarter? It's an interesting balance there.
Yeah, so you can see that the company is really expecting a ton of future growth. So 2.6 billion right now seems kind of small, but when these companies with how fast they're growing and the expected growth in the future, that backlog becomes really important. So basically what companies have said is I'm willing to pay you over time once everything is built out. And what they start doing is they start summing up all of these contracts that come to that number. They also shared within the quarter that coming up on the third quarter, they're going to be adding an additional 25. So they're going to be somewhere almost around $130 billion of revenue that they're expecting to see come online within the future.
Yeah, so they have some healthy numbers here. They got revenue in, they have revenue scheduled, but yet they also, if I recall, carry a bit of debt and also just still building out and dealing with all those growth constraints that may be impeding them.
Yeah, and as you know, if you watch this channel, we are long-term investors, and I talk a lot about PE ratio.
Yeah.
And these companies' PE is all negative because they're spending every penny they can to scale as quick as possible. So, for
Yeah.
example, for CoreWeave here, they're expecting to make between 12.4 and 13.2 billion this year. They're expecting to spend 35 to 39 billion. So basically, they're spending triple the money that they're making. So this creates a lot of execution risk if I'm a shareholder within CoreWeave. And that has been the bear case for CoreWeave is they have an amazing business model and they're growing really quick. What happens if data centers start stalling? What happens if projects get messed up and all of this stuff starts getting canceled? That is the risk that comes with CoreWeave.
Yeah, and when we first started the channel, pretty quickly thereafter, with your guidance recommendations, I built a little AI portfolio.
Mhm.
CoreWeave was in there, and boy, talk about getting some market training experience right away. That stock, it was above 100, then it was below 70, and then it went above 120, and then it went back down again. It created a little stress and elation on that wild ride. Is that typical for these kinds of high growth, high risk, but important companies?
Yeah, and I think you're highlighting a key thing that we should talk about real quickly with all of these kind of things. Any of the stocks here, if you are interested in buying, I would not recommend making any of these a large portion of your portfolio. These are very highly volatile stocks that have very high ceilings and very low floors. And like you said, they're a great way to learn what the volatility of a true crazy stock can be because CoreWeave has been a true roller coaster. And what's interesting though, there are certain dip opportunities that come up where, like in hindsight, you're like, wow, that was a really good price as it goes back up. So that's something to keep in mind that all of these things should be more of a satellite position of your portfolio rather than a core holding.
I do wonder long term for these types of companies. Obviously, they're in huge demand for model training. Is there a point in kind of the AI potential where they're less important and less in demand?
I mean, I think that's another part of the bear case that happens there of like what happens once we get compute scaled to the point where there's enough to go around. That's the bear case. I think the bull case is we don't know when that point is going to be or how soon that's going to be. That could be decades from now. So if that happens decades of now, I can guarantee you that these companies will be worth a lot more money than they are right now. So the real question is when will we get there and how quick will it be? And how much will it cost? And I think those are all the kind of variables that make this a very volatile stock because of that.
All right, CoreWeave is one of the leaders in neo clouds. They have huge demand, huge backlog, but they're also volatile. They got a lot of debt, a lot of capex spend. Any additional summary thoughts there about CoreWeave?
Yeah, something I want to point out is they are valued right now at about $58 billion. So if you think that management is guiding to 12.4 to 13.2 billion for this year, that's actually not much of a revenue to value of the company multiple as you might think. So if they are able to continue to execute, you are going to see the stock continuing to have explosive moves higher. And that's what allowed this recent earnings report of it. I think the most of the people were calling it a clean report. That is the magic word that you want to hear because all these guys have to do is execute and they have a really good business.
Yeah, that's awesome. What would be the bear case for these guys?
I think the bear case would be delayed projects, data centers getting blocked, having issues with demand for compute. Any of those things happen, and this stock could easily crater because it is built around those contracts. Granted, if they have guaranteed revenue coming in, I think the biggest risk is any projects going wrong or data centers getting delayed. That could then impact contracts that they've signed up because they have to be able to provide the compute by certain dates in order to hit those.
Yeah, that's fair. And but aren't they a unique partner to Nvidia as well with some exclusivity or unique relationship things?
Yeah, that's a great point to make as well. Is CoreWeave is invested by Nvidia. You know, Nvidia is a major player with this, and this is where we get back to the whole circular investing thing. Is they give money to CoreWeave, CoreWeave buys their chips. You know, we're all one big happy family, is what they want you to think from there. But because that relationship, they're getting really early access to some of these like Vera Rubin Next Tech chips which then allows them to get customers that may not want them just to get the new chips as quick as possible. So that's kind of a competitive advantage that they have that they are backed by NVIDIA.
So CoreWeave, are they 100% buy, or they put on your watch list and wait for a strong dip, or they don't touch with a 10-foot pole? Where do you put CoreWeave?
I have them on my watch list, I would say for now. I like them a lot more before earnings, like when they were well below $100 there for a while. That I felt like the bear case was taking over a little bit too much.
Yeah.
They said really good things in the quarter. And Nebius, as we're about to talk through, kind of stole the show, but CoreWeave had a good quarter. All of these in general, though, are more watch list candidates than me going to really go buy them right now.
And is that just because of its valuation and price point for the share?
That's right. Yeah. So if I would not be surprised if any of these stocks continue to go up, but all of these could have substantial pullbacks. And if any of them have substantial pullbacks, that's when my buy list would definitely start to open up.
Okay, so that's CoreWeave. You mentioned Nebius. Let's dive in.
Yeah. So Nebius is the next one that just had an amazing quarter, and I'm going to throw some numbers at you that are probably going to be blowing your mind here. So Nebius reported revenue of 582 million. Growth was 454% versus year ago. So it's pretty rare we cover any stocks on this channel where I'm getting that substantial of triple digit growth. And what's interesting is they have a couple of different parts of their business, but their AI dedicated piece grew 514%. So again, the area that is growing so well, that is well known, is actually growing over 500%. And this was on margins of around 50%. So again, similar to CoreWeave, I'm giving you numbers that it's like this is one of the most incredible business models you could possibly have just from a revenue and margin look perspective.
Yeah, and I'm surprised because when you look at the CoreWeave revenue, like the Nebius is not even $1 billion in revenue. I see the high percentage growth, so in my mind, I'm wondering, are they very new to the space and just getting ramped up?
Yeah, and I think that's exactly what's happening. They're a much smaller player in the space. So right now they are expecting a average revenue run rate of right around $3 billion. So they're on a much smaller scale versus CoreWeave. So again, CoreWeave was closer to 13 billion. So what's funny though is that even though their revenue is expected to be about a quarter of the size, they're currently valued at a higher valuation than CoreWeave.
Yeah, so that's interesting. What is their market cap?
So right around 75 billion. So it kind of is interesting, right? So it's like CoreWeave is the larger player that has been, if you will, more proven out, has higher revenue currently, growing well, versus Nebius, much smaller player, more risk there, but growing extremely rapidly. And there's a couple of other nuances to it, but as a neo cloud investor, but when I'm picking between those two, it's like, do I want more of the larger established player, or do I want kind of like the high growth, faster play between those two?
Yeah, with that market cap and its valuation, is it fair to say that they got to pretty much hit perfection in their execution?
I think so. And after this massive run, so again, CoreWeave jumped 19% after earnings. Nebius jumped like 35%. So, I mean, this is a super highly volatile stock. You talked about being a CoreWeave stockholder. Nebius, they're right there with you. They've been having massive swings in there. So that's the thing is these stocks will pull back massively if those earnings are not hit. So we need really good clarity on how close are they getting to profitability? What is the backlog looking like? And on top of that, how much are they spending? Does it make sense based on balancing all of those factors?
Well, I know with a lot of these build out companies, what gets a lot of attention is its capex spend and how much they have to invest to be able to build out their data centers and whatnot. How is that going for Nebius?
Yeah, so I mean, they spent a lot in Q2. They spent 5.7 billion in capex for Q2. So again, when you think about the amount of money they have coming in
Right.
versus the amount they're spending, I mean, that is a massive difference there, and where the risk of the operation starts coming up. But one thing to mention with Nebius is the way that they're starting to negotiate contracts has gotten really interesting. So if you look at what they're looking for prepayments, so basically they're having people sign up to get compute from them, but they're having people prepay to get access to that. So within 2026, they've got $9 billion of prepayments. And they say in total, they now have $40 billion in prepayments from customers. So it's nice as an investor to know that Nebius is not going at this alone to build this out. Customers are coming to them saying, I need to be online as quick as possible. I want you to do it. And not only that, I'm going to help fund the build out for you so that I can get up quicker from that. That shows the insane demand that we're seeing right now.
Yeah, which probably helps them on their debt load. They don't necessarily have to take in that debt to do that. So that is an interesting model. Obviously, they're on the hook to then deliver, right? So
Yes.
you have all kinds of dependencies there, but that is different. Do you think that that is a differentiator in its ability to succeed in market and compete against um, CoreWeave?
Yeah, I think it's a great advantage for them because it allows them to achieve profitability quicker. Before you look at the capex, I mean, they made money in the quarter. Like the business model has been proven. It's just they're having to spend all of this money because they need to continue to expand from there. So that's why Nebius has grown so much and is currently valued at a higher valuation than CoreWeave, even though they're way smaller. Investors are basically saying we bet Nebius has a better business model than CoreWeave by that because when I look at the absolute numbers, the backlog, everything, it points to CoreWeave, but the execution of the business and the type of business model, that's when it starts pointing back to Nebius.
All right, so we have Nebius being newer to the neo cloud scene, doing real well, triple digit growth, revenue increasing, interesting business model and how they're funding their build out. Any other points to bring up for Nebius?
I think that if Nebius has been one of the hottest stocks on the market, of the stocks we're covering today, I'm most hesitant to recommend any buying of Nebius of the whole list after this massive run. I think that, we've talked about a lot in the channel in our AI bottleneck videos. The spotlight of AI will continue to move. Memory was the hottest thing ever. Then memory was everybody's over it, and we saw companies like SanDisk pull back 50%. Well, guess what? Memory is starting to pick up again, and we're starting to see more momentum there, and those stocks are recovering. I think we're seeing the same thing with neoclouds. So if you buy now, you're kind of buying into the hype, which could be the right move because, as we know, the memory stocks have done incredible. But you could be buying at a high point where if you just would have waited a little bit, you could have gotten a better entry point. So that's kind of like my main takeaway with Nebius.
Yeah, that's fair. That's fair. So buy, watch, sell. It sounds like you got it in a keep an eye on it.
Yes, I definitely would not sell because this stock has massive momentum. The quarter was amazing. I really like their business model. And of all the stocks in this list, they've kind of leaned towards being one of my favorites. But again, we always like to look at the valuation of the stock. I could love the business and the company, but as a investor, you have to be aware of the price to earnings and the valuation.
All right, so that's CoreWeave, Nebius. Who do we have next?
Next, we have Iren. And what's interesting with these guys is you talked about Nebius being a little bit newer in the scene. These guys are even newer on the scene. If you remember a couple of years ago, graphics cards were sold out because people were taking gaming graphics cards to go Bitcoin mine. That was the hot new thing to do. And gamers were pissed across the world because they can't get my graphics card because there's people buying it to mine. Well, we know Bitcoin is price has come down a bunch. the amount of people doing it and going and getting into Bitcoin mining has gone up a lot. So it's really hard to get good returns on Bitcoin mining. Iron was a Bitcoin miner, and what they're doing is transitioning their business, which already has tons of these GPUs, into making it a neo cloud. And they're starting to see some early success with that.
Yeah, that's interesting. Do you have a beat on what's required to make that transition?
Really, it's just the kind of service that you're providing. But what's interesting with Iron is when you look at the numbers, and again, before I go any deeper, Iron does have earnings coming out later in August. So the numbers we have now are a little bit, I don't want to say out of date, but kind of more projections and forecasts. We're going to get some really big updates. So if you are interested in Iron, I would make sure that you are looking at the earnings here soon. But of their $145 million in revenue, which again is even much smaller than Nebius, $111 million of that is still coming from Bitcoining operations. So they're definitely in this transition phase where they're starting to build out contracts, though. So they're more of a wild card, I guess, when it comes to like actually looking at what is going to forecast going to be.
Yeah, and they aren't the only ones who are in Bitcoin and then transitioning to diversify. I think of Clean Spark, which
Yeah.
came on my radar because our boy Leo was
Yeah.
had invested them into them, and they've struggled because, as you know, Bitcoin has struggled the last few months, and so with some of that those pullbacks in Bitcoin, those companies have experienced volatility around that. So with this craziness of the AI build out, and as you mentioned, the spotlight moving plus diminishing returns on Bitcoin and that aspect, seems like Iren could be volatile, if not more volatile than the first two.
I think so. So if you were to rank volatility chances or the amount of volatility between these first three, it's kind of hilarious to say that CoreWeave is probably the less volatile because you know that like in the scale of things, it's an extremely volatile stock. There's just more what ifs with Iron. And what's ironic is the same technology that helped Bitcoin mining is the same technology that's extremely useful for running these AI clouds. And we know there's a shortage on chips, there's a shortage on memory. Well, guess what? These companies are sitting on all of these super valuable resources and just repurposing them for this new huge need. It's kind of genius when you look at the business model.
Right, right. Yeah, and yet to that big AI broader scale of stuff, picks and shovels where you have the TSMs of the world, you have the AMATs of the world, also revenue going bonkers because of all these demands within companies needing each other's services. So it's just wild to see and watch.
It is, yeah, and again, that's why with Iron, I'm more assuming that they can continue to get contracts rather than it being a guaranteed thing because there's tons of competition here. Because when I look at the value of Iron, they're valued right around 14.7 billion. So this is dramatically lower than the other companies. So again, Nebius was at 75 billion and CoreWeave was right there in the 50s. So at $15 billion, if their model is proven out, this could be one of the highest ceiling stocks we've talked about today because the future forecast has not been really built out and the projections are not at the level of a Nebius. So there could be room for Iron to run if that's the case.
Yeah, so this impending earnings call can be really interesting to see what happens with either them exposing or sharing what their current challenges have been, or showcasing their wild growth and potential. So it'll be interesting to watch.
Yeah, and again, that's why for sure on Iron, I wouldn't make any calls on it today. And the only call I can make is that we should expect a ton of volatility. I mean, it's probably going to be a double digit move after earnings either way.
All right, so we have CoreWeave, the more established, hot on their tail is Nebius, and the new kid on the block, even newer than Nebius, is Iren.
Yeah, so it's funny you mentioned picks and shovels earlier. We're going to be wrapping up the list today with the picks and shovels of NeoCloud, if you will. And what I'm talking about here is Applied Digital. And Applied Digital leases the space from the data centers to the core weaves of the world. So think of them as they're collecting money on the people running the neoclouds rather than them having their own version of a neocloud. So it's almost a way to be like, look, I don't know if CoreWeave is going to win. I don't know if Nebius is going to win. I don't know if Iron's going to win. But if neoclouds win, then that means Applied Digital will win because they are building out data centers and scaling things and then renting that space out. So it's kind of an interesting way to play the neocloud aspect.
Right. And all of these companies are facing a little bit of AI backlash, if you will, from data center builds out from cities and towns and municipalities not wanting that consumption, the power drain, all of those things. So um, it doesn't seem like it's fat and it's going to leave like the dot com kind of bubble burst, but it does raise questions. And this is why I think everyone's talking about it, because you have such huge spend, not a clear ROI yet on, how much is it actually going to generate profit for these companies downstream, but also exciting times to maybe be a part of this gold rush, if you will.
Yeah, I mean, there's definitely risk when it comes to all of these business models. But I mean, when you look at the revenue from Applied Digital, I mean, they were up 407% year over year. And the revenue is a little bit misleading just because it's not pure leasing. There's also like just money being made in the production and building of the data centers, which that won't be always a guaranteed thing moving forward. But when you look at the data center revenue other than leasing, it was still 51 million. And they ended with about 4.2 billion of cash with $5 billion of debt for Applied Digital. So from a when I'm looking at the CapEx perspective and like where they are with a risk to their business, it's a little bit lower than some of the other companies, but still, we know these data centers take a lot of money to get built out. And I think you brought up one of the best roadblocks that is a roadblock for each of these is the politics behind things. Are there going to be more states that put more regulations that slow data center buildouts? But my ultimate counterpoint to all of this is let's start saying all of these data centers stop getting built from where things are at. Well, guess what? We still need the compute, and the existing players that have those facilities are going to become more valuable, which then helps all of these players as well. So instead of them expanding their amount of service, what are they going to do? They're going to increase prices, is what they're going to do. So there's a couple of different ways for these to win. We hope that we don't continue to see all of the data centers getting blocked, but that's an important thing to keep in mind that even though if the data centers get slowed, they can just raise prices to help offset this.
Yeah, because that scarcity creates the demand, which drives pricing power.
Yes, and we know that the demand part of the equation might as well have an infinity symbol at this point because every single earnings call we heard from all of the major players, we don't have enough right now. And we heard memory companies saying that they're sold out through 2028. Chip makers are maxed out. We're just maxed out across the board. So it really is a supply. That's the part of the equation that continues to be the question mark for everything.
So for this company, making sure I understand what they do, they basically like use they could have one of their customers or customers be CoreWeave and Nebius and Iren. Let's say all three of those run out of compute power because they're using all of their resources to capacity. They want to do more. They could then turn to Applied and say, "Hey, we want to rent out some space to continue doing what we're doing." That's basically what they're doing.
That's it's essentially exactly what they're doing, and that's why this business model is really interesting, right? Because they can go back to Applied Digital and guess what? We need more space. We need to be able to build out more and use more of your thing, and they are happy to give that to you. And that's why Applied Digital is a really interesting way to do this. If I make a bet on Applied Digital and I want to be an investor in Applied Digital, I am also making a bet that neoclouds are going to work out and there's going to be continued demand from their customers. That's so that you can see basically the fate of these is kind of intertwined, if you will, because Applied Digital needs these companies to win, but Applied Digital doesn't necessarily care which of these companies wins.
Yeah, and what's your take on their fundamentals? Are obviously they're still in growth mode, but are they looking positive or looking promising?
So with we look at Applied Digital, I mean, they are continuing to have really good margins. They get the triple digit growth that we saw from that. But again, this is another company that they're spending their money that they're making, and then they are then putting it out. So basically, it's like a net loss from a PE perspective. Right now, they have about $36 billion when it comes to leases. When we look at that moving forward, so when we look at CoreWeave, Nebius, and Iren, I care more about what is my annualized revenue run rate from these and how does that compare to my backlog. For Applied Digital, it's how much of my space is being leased out and for how much. So if they have 36 billion in the future coming in versus right now making about 259 million, that's a huge disparity there that you can start seeing. But from a market cap perspective, they're valued right around $9 billion. So again, this is an even smaller company versus the other ones. And I think the key difference here is the margins that you're gonna be able to making leasing versus actually being the neo cloud provider.
First, starting with Applied Digital, what's your take? Is this another watch stock?
So I think on Applied Digital, that this stock has also had a pretty good run when you look at it over time here. For me, Applied Digital is the stock I go with if I think that there's risk in any of the neo clouds that I talked about. Applied Digital might be the best way to say I believe in neo clouds, but I don't really believe in a certain one winning. Like I'd rather just make a picks and shovels bet. That's when I would probably go with Applied Digital here.
High level summary of this whole aspect of AI build out and your overall thoughts here.
Yeah, so neo cloud to me is a super exciting space to be in as an investor. You mentioned you've been in CoreWeave. I think that this is an area that is going to continue to be talked about and be a hot topic moving forward. I'm a believer in the space personally. Like I think that these companies will work. The stocks are expensive from a PE perspective just because all of these companies are currently losing money because they're taking every penny they can to scale as quick as they can. So all of these stocks have high risk when you look about these. If I'm an investor and I'm trying to decide that, okay, I believe in neoclouds, which one should I invest in from there? I would pick CoreWeave if I want the most established player that has the largest backlog that probably has the highest chance to win because they have a very large start. I mean, like what they mentioned, for what we can see in Q3, they're going to have like $130 billion of contracts. I mean, that is a massive amount of money. So I think CoreWeave would be my pick if I want the established player. If I want the fastest player that maybe has the best business model out of all these companies, I would go with Nebius. But I have to understand Nebius is also the secret is out, if you will. They had an amazing quarter, stock ran a bunch. So I'm not exactly getting a deal on what I know about Nebius. Granted, the stock has been hot and may continue to run from here, but just knowing that I'm not getting it super cheap because it's already ran quite a bit from there. So if I want the hottest growth stock that has probably one of the best models, I go with Nebius. Iren is more if I want a high ceiling play. We don't know as much about them. They're still transitioning over. I would say of the stocks we talked about, they're my personal least favorite of the four, but they could have the highest ceiling out of these because they have more at risk. But if they have a really good quarter, that I may change my tune, but they're probably my least favorite of these. And then finally, for Applied Digital, to me, it's like the quote unquote safest of all of these to pick, just because their business model is a little bit more guaranteed versus each of the specific neo clouds. But I would just watch list most of these after the massive run that we've had.
Thinking real quick about their competitors, what comes to my mind is Mag 7, especially the ones that already have hyperscaling capacity and do some of this cloud work already, maybe them taking some of their resources and making it more GPU focused to do the neo cloud thing as well. What's your take on the broad competitive landscape of neo clouds?
Very competitive. And I think you mentioned the clean spark. There's going to continue to be more and more companies that used to be Bitcoin miners entering this. That's just going to be the case. We've seen crypto really pull back in general. You're going to see a lot more businesses changing their models. So there's going to be a ton of competition here. So again, there's a lot of risk on these. Stocks don't move double digits up and down like these do unless there's tons of fluctuation in the risk levels of what's going on. Mag 7 are the Mag 7 for a reason. They have, borderline unlimited resources. But what's interesting is they are the companies partnering with CoreWeave and Nebius. So if for me as an investor, if I see the biggest companies actually believing in the neo clouds, that makes me think that they must be onto something as well. Because if I have unlimited money, they would just buy their own clouds or just do their own thing anyways. So maybe there is a spot in the future for specifically designed AI clouds like we're seeing with these.
Well, that's fantastic, Alex. Thanks for sharing and talking stocks today. I encourage anyone who's watching to like and subscribe. But more specifically as well, we'd love to hear your take on these neo clouds. Do you like any of these that Alex brought up? Any that you have a counterpoint on, or any of them that you're bearish against? Let us know. We'd love to hear. You can check us out also at alextalkstocks.com. Sign up for our newsletter. Alex, thanks for sharing your thoughts today.
Thanks. It's a fun topic to talk about. And I have a feeling this is not going to be the last time we talk about neoclouds.
Absolutely. As you mentioned, the runway is long for these guys. So I'm sure we'll ride the roller coaster with them. Thanks a lot, Alex.
I'll talk to you soon.
All right. Have a good one. Ciao.